The problem with most financial shows when it comes to calling the market is that it's one guy's opinion over and over again.
Sell, sell, sell!
But any veteran investor knows that there are two sides to every trade, a buyer for every seller, and vice versa.
Buy, buy, buy!
That's why MoneyLife brings you a wide range of experts.
I need people who, can work well under pressure.
Each day you get the benefit of a new set of eyes on the market with different methods and decision-making tools. Every day you'll hear a different expert giving their take on the market, on what looks good, what looks bad, and how they feel about some of your stock selections.
This stock is blowing up right now.
You never know who might show up to talk stocks. It may be a famous money manager or someone you've never heard of before.
No!
But you'll always get their straight talk.
Must you always be so blasted honest?
Their straight talk, that is, about what they see happening on the market and where to think about putting your money on the daily MoneyLife Market Call.
That's right. It's the MoneyLife Market Call. And today we're bringing you a very different point of view, or it's a point of view that adds extra things, not just what's happening in the market, but much more. Because my guest is Christian Greiner. He's portfolio manager of the Azzad Ethical Fund. The ticker symbol is ADJEX, and it's AzzadFunds.com if you're looking at the website, or if you want to follow them on Twitter. They're at Azzad, which is AZZAD, at Azzad Funds on Twitter. Now, as the name implies, the Azzad Ethical Fund, well, it's not just, hey, what's the market doing and how do I like to invest? There is much more to it that gets factored in, and I'm very pleased to find out how that gets factored in as Christian Greiner makes his maiden voyage in the MoneyLife Market Call. Christian, welcome to the show.
Well, thanks for having me, Chuck.
Even if this weren't your first time joining us, we start every interview here always looking at methodology because we need to know what stands out and what doesn't. And in your case, we also need to find out that mix between here's what I like from a company standpoint and here's what passes our ethical standpoints.
Well, that is a fair request. And, the thing that I'd like to talk about is that the Azzad Ethical Fund focuses on mid-cap growth companies. And within that space, mid-caps are, of course, traditionally a very interesting part of the market. You're looking at companies that have made it through the initial growing pains a lot of companies go through, and that you see a lot of small caps still going through, but still having compelling organic growth opportunities that a lot of large caps may not have. And historically, large cap stocks that need new sources of growth go hunting in the mid cap space for acquisition targets to boost those metrics. And this year has seen some of that. For the Azzad Ethical Fund, the process starts like most socially responsible funds. With ethical screens that eliminate stocks whose business models could lead to harm to oneself or to others. We're not investing in any of the traditional sin industries. We're talking tobacco, alcohol, gambling, or the weapons industry. What makes the ethical fund different than many, though, is that we don't invest in companies that generate a significant amount of income from interest or have high debt on their balance sheet. So in a way, we're avoiding debt on both sides of the equation here.
Well, and in some respects, you could argue, and some folks do, that debt is even that much more sinful than the alcohol and the tobacco, at least in terms of what it does for a stock and its potential for performance.
And that is true. So when we have that universe, obviously this takes down the universe of stocks that we can invest in. We then put that through our quantitative scoring system. And what we have here is a quantitative scoring system that screens for names that have been evolving, that this quantitative system has been evolving for 20 years now. We rank stocks within their industry and within their market cap grouping. So you're not taking a look at a large cap stock against a small cap stock. It really doesn't make much sense. What drives performance on those would be different. Same with taking a look at a material stock, say, versus a retail stock. We look at 26 factors that varies from industry to industry, which particular factor goes into which particular industry group. But these can be grouped into four areas. You have economic efficiency, how it's converting its earnings into cash flow, growth consistency. Is this a sort of a one-trick pony, or is this a stock that continues to grow its earnings and its sales at a nice constant rate? financials, obviously with our ethical screens, all the stocks that we are looking at are in good financial shape. And of course, valuation. It's great to have a good story, but if everybody else has recognized it and the stock's expensive, you're going to avoid it here for a while.
And so do those screens and the quantitative system also get to a spot where they kick things out? I mean, you just talked about valuations. Okay, great. You have a great value that you buy it. Do you go the other way? I bought it as a great value. The market's now done its thing. Now it's a bit overpriced, and the quantitative model is saying, dump it now?
Yes, Chuck, that's really what drives our sell discipline, is that with any quantitative scoring system, one of the first things you do is take a look at what you currently hold and say, in this run of the scoring system, has the score on it gone down to a point where the story is no longer there, the fundamentals have changed. And from there, we take a look at our new buys as a way to find a replacement for it.
Well, let's talk about what has made it through that process. Now that we understand how the process works, what's a name or two that stands out to you right now because it passes the screens both ethically and financially?
Well, yes. So what we're looking here really is for quality companies with quality returns. And one of those is Keurig Green Mountain, a name that I'm sure is familiar to a lot of your listeners. We initially bought this position in March of 2013, a month after the new CEO issued some guidance that disappointed the street. And the investment community thought that Starbucks would be taking significant market share from them after Starbucks unveiled their own single-serving brewer. As we know, that brewer didn't work out too well for Starbucks. So we saw Green Mountain as a quality name at the time that would be producing free cash flow, but also be aggressively investing in technology that would improve their market position. And we've seen that with the 2.0 version of the Keurig Hot Brewer. Mm-hmm. And in the future, in 2015, fall 2015, if you take a look at their last investor call, they should be unveiling a cold drink system. And this is something that has got a lot of attention on the street and from potential investors. And is probably also one of the things that's driving Coca-Cola's investment in the company. Coca-Cola has made a very public 10-year partnership with Green Mountain that commences in 2015. And, this cold brewer, of course, is going to be driving a lot of that. Coke is looking for growth from some way, somewhere, and Keurig could be the way that they achieve it.
Okay, so that's Green Mountain. It's ticker symbol GMCR. What else stands out to you right now?
Well, another name that we've been in for a while, that's been in our mid-cap growth model since fall of 2009 is O'Reilly Automotive. And for those that aren't familiar with it, they are a retailer of aftermarket auto parts. And when we started doing our work on this, we identified that the average age of a vehicle on the road was over 10 and a half years, and that didn't look like a trend that would be changing anytime soon. Vehicles are built more, much better than they really have been in the past. The average age has been steadily moving higher since 1995. But even if these vehicles are being built much better, they still have normal wear and tear. Think about what happened to your car during the polar vortex last year. Sooner or later, repairs have to be made, and that's where O'Reilly comes in. Nearly 60% of the revenues come from those that take the parts home and do it in their garage. However, O'Reilly also has a background in the do-it-for-me market where they sell it to the people that will be doing the work for you. They're finally moving into the lucrative Florida and Northeast U.S. markets, which could be a growth driver for them for quarters to come. This is just sort of a great company with a great management. One thing to take a look at here is the company's executives manage expectations probably better than anyone on the street, and they haven't missed on a quarterly earnings since 2008.
Okay. So that's O'Reilly, O-R-L-Y. Let's flip it around. I mean, you talked about the sell discipline a little bit. Who's somebody that came out on the wrong end of the sell discipline?
Well, one of the names that we have sold off this year was Timken Steel. And Timken came into our portfolio in an unusual way. It was a spinoff of Timken in the middle part of this year. And while we saw this stock is cheap on a valuation basis, we saw some warning signs in several of their end markets, oil and gas, mining, and agriculture among them. And with our quantitative system, we also have a sort of a fundamental evaluation process that confirms that what the quantitative scores are telling us. We know that often numbers don't tell the whole story. You have to take a look at quality management, competitive position, and, of course, the macroeconomic backdrop. And that's what had us, along with a negative rating in our quantitative system, sell off Timken Steel.
Timken Steel, that's TMST. Now that we've seen how you do it, why you do it, and the way it works, we're going to put you to the test of our audience.
Play Hold It.
You got to know when to hold up.
Or Fold It.
Know when to fold up.
It's Hold It or Fold It time with my guest, Christian Greiner. He is portfolio manager for the Azzad Ethical Fund. It's AzzadFunds.com. It is Azzad at Azzad Funds on ticker. And the ticker symbol, by the way, for the Azzad Ethical Fund, ADJEX. Now, Hold It or Fold It is where we put our guest to your test. If you want to participate directly, then send us your name, your hometown, and the ticker symbols you're interested in to Chuck at MoneyLifeShow.com. One of the people who did just that is James in Schaumburg, Illinois. He wants to know about the Cooper Companies. That's ticker symbol COO.
Well, Cooper, this is a name that we actually own in the fund and have held in for a while. The contact lens space is one of those that's retained its pricing power, due in part to the innovation that you see year after year of the big four producers of contact lenses. Cooper's focus in that market, they're the number 3 maker, but they focus on specialized segments like astigmatisms or multifocals, and that's served them well because they can go in there and charge a bit more than you would for a normal standard contact lens. So contact lenses as a industry will be growing at about a mid-single digits rate as a market. The markets that Cooper is in should grow in low teens for a foreseeable future. So when you have a premium pricing and above average growth, we mark that as a buy.
That was a buy on Cooper Companies, ticker symbol COO. Next up, Bob in Roanoke, Virginia wants to know about Mead Johnson Nutrition Company, MJN.
Well, this is another name that we have owned for a while. They were recently taken down a few percent because it looked like Danone will be standing pat with their medical nutrition business. A lot of people thought that Danone would be selling that business and then taking those proceeds and buying Mead Johnson. Other than that, the business here is still very solid. The relaunch in China will be what to watch for in Mead Johnson for the next couple quarters. So far, what we've seen out of Hong Kong has been great. But you're still looking at a low teens EPS growth for this company for the next couple years. In the consumer staples space, those are hard numbers to come across, so we rate that as a buy.
Would you mind stepping aside? I've got a purchase to make.
That's a buy on Mead Johnson Nutrition Company, MJN. Next, 2 requests from Bill in Royersford, Pennsylvania. The first, GNC Holdings. That's ticker symbol GNC.
Well, this is a stock that we held in the past and actually sold out of this year. It shows the value of looking at a greater industry in general. The industry, and that is vitamins and nutritional supplements industry, will be growing in the low single digits for the foreseeable future. And GNC is getting squeezed on 2 sides. The internet on one, people can go onto Amazon or other online purveyors and buy a lot of the same products that GNC has. And on the other side, in the brick and mortar, Vitamin Shop is a formidable competitor that's really made strides in the last couple of years. And it's getting in the way of GNC broadening their customer base. GNC wants to go more towards women and older consumers, baby boomers and such, that are becoming more health conscious as they age. They might have a couple quarters here coming up on beatable comparable store sales, but longer term, this is a fold.
That was a sell on GNC Holdings, ticker symbol GNC.
Don't get greedy.
Yeah, don't get greedy. Next up, Bill's other request, Michael Kors Holdings Limited, KORS.
You know, this is another company that consistently beats analyst estimates. If you take a look at them on a PE to growth basis, which is how you should look at some of these growth stocks, PEs by themselves don't tell the entire story. They're among some of the cheapest in their space. Their retail partners continue to devote more square footage within their stores to the brand. A good sign demand is still there from the fashion-conscious consumer. They seem to have really learned from Coach's mistakes in the past, and are limiting their exposures to the outlet stores or opening outlets of their own. So that makes it a buy for us.
So fashion company Michael Kors Holdings, KORS, that's a buy.
You are so good looking.
There you go. Fashion, right? Last,
Exactly.
Ning in New York wants to know about Intuitive Surgical Corporation. That's ISRG.
Well, this is a name that recently started scoring as a buy in our quantitative scoring system. And one of these things to remember is that we're still looking at this, and the opinions that I'm giving here are believed to be off of reliable data, but we can't guarantee these. But I'm just starting to go back and revisit my prior work on them. And one of the questions about eye surgery in general has been just what kind of surgeries can be addressed by that Da Vinci system that they produce. The opportunity now is in the hernia surgery space, and it's just really starting to be realized by the investment community. And that's offsetting fears about procedure volume declines in the urology space and just how many of these procedures that people were actually using the machines for. So we're doing our homework on it now, but in our quantitative system, it is coming up as a buy.
So it's a buy, but you haven't bought it yet. That means
I'm just taking my time before making the move.
it's a bit of a hold, looking for that buy point. Again, buy on the quantitative side, yes, but it hasn't gotten all the way there on Intuitive Surgical Corporation, ISRG. And speaking of buys, well, we unfortunately have to say our goodbyes to Christian Greiner. He's portfolio manager of the Azzad Ethical Fund. That ticker again is ADJEX. Christian, this was great. I hope we get a chance to do this again with you in the future.
I'd love to do so.
Remember, if you want more information on the Azzad Funds, it's azzadfunds.com. They're on Twitter at Azzad Funds. All right, we're just about done with the December 17th edition of Money Life, but if you stick around through this message, we'll cross the finish line together when Money Life continues. Let's do that.